You got to be flipping my flapjacks, folks. It's like a new year started and suddenly we're all allowed to make money again. All our stocks start to go up again. Our portfolios go up again. Absolutely incredible. And I must say, okay, massive day in the public account today, $46,000. That's more than I made in like my first 2 or 3 years of being in the workforce. And that's just how much that portfolio went up in a 7-hour span, essentially, right? Along with all my other portfolios, absolutely insane day. And I'm sure it was for you guys out there as well. And this is one of the few times I've ever seen it where the bulls and the bears are in complete disbelief right now of what is going on. The bulls are looking at this and they're saying, this can't be reality. There's no way this is real. It can't be this easy, man. This year started and all of a sudden we're just making all this money. No way, okay? And the bears are in complete shock right now. They're getting absolutely obliterated. And I mean absolutely obliterated on a lot of short-term put options and things like that because a lot of people were talking about what was everybody saying going into this year. Everybody on Wall Street, right? And I watch 1 million hours of CNBC every day. What was everybody saying? They said, wait, the first quarter, second quarter is going to be ugly for the market, right? It's going to be so bad. And so what did people start doing? Start loading up on put options, short selling, all those sorts of things, right? And a lot of short-term put options too that expire in a matter of a month or 2 months, 3 months out, 4 months out. Why? Because everybody was convinced that the market's going to tank. As soon as 2023 starts, it's going to be a horrible first quarter. And then what's going on? Market to the moon, okay? And so there's a lot of important things I want to show you in today's video so you can kind of get some context of what's going on. Is this reality? Is this not reality? Is it just going to be back down? Or are we actually starting a new, let's call it long-term bull cycle here? And I'm going to show you some very important things here in this video that you're not going to see anywhere else. And I can almost guarantee you don't usually look at some of these things I'm going to show you in this video that I think are important just to kind of keep an eye on to understand what's going on out there, what folks are pricing in and aren't pricing in. Hope you guys enjoyed it. As always, by the way, thank you every single person that subscribed to the channel. I absolutely appreciate each and every one of you. And also, if you're looking to apply to join my private stock group, the private wealth group, check out the pinned comment down there. Also, if you were looking to join us in the Patreon, that will be in the description area to see the stocks I am buying as far as that goes. As far as the private stock group, only if you're like super serious about investing does that make sense. And also only if you're somebody that, you know, is planning on investing quite a bit of money or you already have quite a bit of money in the market. That's the only folks that really make sense to be in there. If you don't, then maybe join the Patreon. That might be the best bet for you, okay? So first out here, looking at my stocks here today, insane. And this is just like insane day after insane day after insane day. It's not like this is the first day. It's like this whole year has just been absolutely incredible, right? And Avant Brands up 12% plus today. We'll talk about that in just a moment. There's a specific reason why that stock moved. Shopify got upgraded today, and that made a big upward move. Tesla, my Tesla, 7.7%. I got something important I got to tell you guys around Tesla, okay? So for Tesla shareholders out there, keep in mind the stock's running heavy into earnings, okay? Heavy. Now, if this stock continues to run over the next couple trading days and pulls back after earnings, doesn't necessarily mean the earnings were bad or no one believed in the company anymore. It's just this stock is running heavy going into earnings, okay? So the best scenario might be for the stock to pull back over the next day or two going into those Tesla earnings, right? Which are a couple days from now after hours. Because if we keep running for this next couple trading days here, we're setting ourselves up for a lot being priced in nonetheless because this stock is running and running and running. I mean, like literally, didn't Tesla just make another insane move on Friday? And then here today, it's another 7% plus move. So we'll see how things shake out there. But the thought process is around this is Elon's going to come out and he's going to say demand's going crazy right now. Factories are going to be at full production and we're going to, sell every single vehicle we can make and we're going to hit crazy numbers in 2023. If that's the case, then even if it does run into earnings, it'll run more after earnings, which is kind of crazy to think about because this stock is climbing and fast. I mean, it's up 40% in the last, 2 weeks or so? Like literally look at where the stock was a couple weeks ago. It's like just off to the races, right? Nordstrom, massive move up today, over 7%. As far as that one goes, Qualcomm, semiconductor play. I own that in my dividends only account. Revolve is a stock I own quite a few shares in the public account specifically. That one's 6.5% here today. I think I do own Revolve in the Patreon portfolio as well, right? Skyworks Solutions, great value play dividend stock. They get a significant amount of their business from Apple. Nice move up here today. Corsair, 5% plus. Palantir, 5% plus move for Palantir shareholders. Fubo's trying to get back on the right track. And obviously, Meta continues to come back. Look at that, 2.8% move. Now, real quick, what's going on here with Avant? I'm actually amazed Avant wasn't up 20 or 30% today, to be quite frank, because they came out with some preliminary numbers that are ridiculous. Check this out. Avant anticipates reporting gross revenues of $8.8 million. But keep in mind, Avant's like a super small market cap company, so this is like insane revenue for Q4 2022, and gross revenue of $22.6 million for the year ended November 30th, 2022, both which represent record revenue numbers. These preliminary Q4 revenue numbers represent an increase of 88% as compared to Q3 2022, and an increase of 219% as compared to Q4 2020. Companies right now are having trouble even growing their business at all. And this company's just like, oh yeah, we just grew 219% year over year. That's ridiculous. Absolutely ridiculous. And they're expecting much more growth. I think the reason the stock wasn't up 20 or 30% and it was only up 12% today is I think a lot of people are waiting to see the actual earnings and see what's going on with net income or net loss. Because in this market, it's a tough market, man. And although this is ridiculous growth, a lot of people still want to keep an eye on the bottom line. What's going on with net income? What's going on with, are they going to lose money? Are they going to make money? It's great that you got this incredible revenues, but what about the bottom line? Are we actually going to make some profit here or not, right? And so that's what I think everybody's waiting for. I didn't buy the stock today. The main reason I didn't buy the stock today, despite these insane numbers, is just for the mere fact that I want to see the bottom line. And so when they come out with those actual numbers, we'll see what shakes out there. But nonetheless, the growth is insane. One of the fastest growth companies you'll find out there. Insane. Big tech. My gosh, look at AMD. It led big tech today, 9% plus move here today. We already talked about Shopify and Tesla. Nvidia, if I recall, got upgraded today. Somebody in the private stock group shared that in the new breaking news tab, which, by the way, everybody in the private stock group, private wealth group, check out the new breaking news tab. That's phenomenal. We just post, relevant breaking news in there. That's definitely very helpful. So that one just continues to move. I mean, approaching $200 a share, right? Just insane moves. Every single stock on big tech was green today. Every single one of them. This is pretty incredible. I saw this on Fast Money here. Check this out. Bouncing off the bottom. Percent off 52-week low. Pinduoduo, which is a Chinese stock, 310%. Netflix, 120%. Nvidia, 78%. Moderna, 71%. Ross Stores, like one of the simplest companies out there, right? 67%. Meta, 63%. If you've been a buyer over the last 6 months, congrats, because you're likely making a fortune right now. That's all I'll say about that. Absolutely incredible, right? Look at this. Safety stocks, my safety stocks watch list, right? Look at how poor these stocks are performing on a great day for the market. Big tech's roaring. Look at how poor these stocks are performing. P&G was down. Campbell's Soup down. Was this SJ Smuckers or whatever, right? Down. Pepsi down. General Mills down. Clorox barely eked out a gain. Coca-Cola barely eked out a gain. Kroger barely eked out a gain, right? So these safety stocks, it's clear there's money starting to rotate out of these babies into other places. This was where everybody wanted to hide their money in 2022. And a lot of these stocks did very well for themselves. But it's clear as day, there's rotation of money going on, and those ones are starting to, let's just call it, not perform so well. Now, I warned everybody back in late spring, early summer about oil, right? And I said, hey, the name of the game with commodities is buy those babies when no one wants to buy those commodities, if you're trying to play any of these commodities. And when things are roaring and going to, multi-year highs and things like that, stay as far away as possible. And unfortunately, not everybody got that memo nonetheless, right? And oil has just been tanking. And I called out something about 2 or 3 months ago, and I gave you another warning, right? What was that? It was natural gas. Natural gas is now down 40% plus in just the past 3 months. Natural gas is another one of those. All these commodities, man, they're commodities. And understand, if you are buying into these, especially if they're at multi-year highs, you need to run for the freaking hills on those babies. They're not some stock that can just keep going up and up and up. That's not the way commodities work. It's never been the way they work, okay? This is not like buying into a company where they can report greater earnings and then even greater earnings and then even greater earnings, and like it can go on a 3-year, 5-year, 7-year, 10-year run of just in crazy returns, right? It's not how commodities work. These babies were due to come down massively, and they're starting to come down massively, right? And nonetheless, we obviously see that playing out with natural gas there, which is, by the way, great news for inflation. Now, if you look at oat futures are showing us something similar here. Oat futures are now down 41% in the past year. Now, something interesting here, right, is check this out. This is a 1 month of Oatly stock versus oats, right? And look at Oatly stock. It's made a 70% plus move. I think a huge component of that move isn't just kind of the risk on nature of the market we're in right now. I think another huge component of this, folks, is the fact that people are understanding oat prices aren't coming back. There's a lot of people initially when oat started to go down that were like, oh, maybe this is just some short-term drop and it's right back up. It doesn't look like oats are coming back, and they're not coming back anytime soon, right? I mean, look, this is a 1-year chart of oats. I mean, just look at it. There's no signs of recovery there. And this was an insane level, and so don't be surprised if Oatly's margins absolutely skyrocket over the next several quarters. And there's obviously people getting in front of that, right? And, people are going to do whatever they're going to do in regards to that, right? It's not just oats. Look at wheat futures. Wheat futures had this insane move back in the springtime and summertime of 2022 to ridiculous levels. Wheat shouldn't be up there, and it just continues to be in this nice downtrend now, and that's definitely going to be helpful to inflation. Corn, very similar scenario. I mean, look at, all these commodities went through this ridiculous move in late spring and into summer, right? After, obviously, Russia did what Russia did. And nonetheless, all these babies are coming back down to reality, and a lot of them still have a long way to go. I think that's the important part for folks to understand. Now, I almost guarantee you no one looks at copper that's watching this video right now, okay? And copper is just one of those commodities I keep on my watch list, my commodities watch list, along with maybe 10 other commodities or so. And copper is one of those that's many times a leading indicator of going into a recessionary scenario. Now, the interesting thing is copper has started to come back strongly. So it's almost like copper is saying, no, forget about the major recession. It's not coming. Because this was one of those that was kind of giving you those telltale signs of oh boy, we're going to go into recession. But look at, copper is moving up and moving up. And that's just always one of those that's just going to kind of let you know, oh, things are about to get bad or things are maybe not going to be bad. So it's not something that you can definitively say, oh, copper's going up, so we're good, or copper's going down, so we're screwed. It doesn't really work like that, but it is just another leading indicator. It's just something to keep an eye on there, right? Now, in regards to the markets in general, right? Look at the moves here. The NASDAQ is now up. This is year to date, okay? Year to date. And by the way, I'm recording this video on January 23rd. 23rd. This is year to date. The NASDAQ is up 9.3%. The Russell's up 8%. The S&P 500 is up 5%. The Dow's up 1%, right? Now, remember what I told you guys about the Dow. If we get into a downtrending market, the Dow, in my opinion, is going to do perform far worse than the NASDAQ and the Russell. And if we get into an uptrending market, the Dow's not even going to remotely perform. Now, how did I have so much confidence to make this call, right? The main reason is just looking at valuations and understanding where the markets have been and where they're likely going, right? And the bottom line is, if you look at valuations of tech stocks, in early winter time, late fall time, those babies were just down and out. It was 50, 60, 70, 80% down, declines across the board, while the Dow was just holding up tremendous. It's unsustainable. And looking at valuations of all those different Dow stocks, they're overvalued, many of them. So when it comes to these stocks, there's not much room for upside, but there is significant room for downside. And so if this is a fake rally we're in, and we're actually still in a bear market, right, that just has to play out here, and we'll talk about that in just a moment, the Dow will go down much more this year, in my opinion, much more than the NASDAQ and Russell. Now, that's not usual. The NASDAQ and Russell are going to weigh out, basically underperform by anywhere between 3 and 7 percentage points versus the Dow. Not this year. If we move down, that baby, in my opinion, no doubt in my mind, is going to move down way more than the NASDAQ. I wouldn't even be surprised if somehow this year was positive for the NASDAQ and the Russell and the Dow was actually down. Wouldn't be surprised at all. Those stocks are way overvalued still. Way overvalued. NASDAQ stocks? Nope. They're all fairly valued. Almost all of them are fairly valued or undervalued. That's a significant difference there, okay? When markets get super unsustainable to one side, which we're talking the Dow is down, less than 10%, NASDAQ was down over 30%, it's not normal. There should be a 3 to 7 percentage difference there, not a 20+ percentage difference there in performance. No, okay? That means the market is screwed up, and ultimately these either have to go down a lot or the NASDAQ has to come up a lot. It has to be one of those two scenarios have to play out. Now, this is hilarious, okay? I haven't showed this in a long time. This is the AII investor sentiment. I haven't shown this in months because I just got the thought today of I should look back into that and see what the sentiment is out there. It's hilarious. It's absolutely hilarious, right? I mean, the feeling out there was so bearish back when the market was tanking, right? And all of a sudden now the market starts to come back, and suddenly there's a lot less bears. And what's this week going to be? 20-something% of investors bearish? I mean, it shows you that ultimately what dictates people's feelings of bearish and bullish is not the economy, is not earnings, is not anything fundamental, unfortunately. What dictates most investors' feelings is where the market goes. If the market's going up, suddenly people magically start feeling more bullish and less bearish. If the market's going down, then people suddenly stop feeling bullish and they start feeling bearish. And you just literally look at the sentiment, and it correlates perfectly to this. And, it's as a fundamental investor, like, what should we do, right? Well, if the market's going down huge, what we should be doing is buying, right? We should be buying the dip. And if the market's at insane valuations and stocks are overpriced, and that's a great opportunity to take some profits, right? If you own a stock and it's priced in the next 3 years of growth, there's nothing wrong with taking some profits out of that baby, right? Nothing wrong with that. And when you see these stocks dipping and everybody's bearish, it's a great opportunity to buy. And going into this year, everybody seemed to be massively bearish, right? And all of a sudden now we're getting this huge pop. Now, it doesn't mean we're out of the woods yet, and we'll get into that in just a moment, but I think that's, for us as long-term investors, very important for us to keep in mind here, okay? Now, in terms of thinking, are we out of the woods or are we not out of the woods, okay? Few factors you have to think about. First is, we have to get all these earnings, okay? All the big dogs are about to report. Now, there's a reason I don't have Tesla on here, because Tesla ultimately is going to put it on its own show, okay? The stocks I'm really thinking about: Google, McDougal, Apple, Meta, Amazon, Microsoft, okay? These stocks are really going to tell us how the economy is doing, how earnings are going. And these ones could potentially, let's call it, rain on everybody's sunny parade here, essentially. What everybody's got to keep in mind is if these companies, if their earnings fall this year, it will affect overall the market and valuations in a considerable way. And so what Apple has to say, I think the two most important companies, in my personal opinion, for this earnings season, one is Apple, the second is Amazon. These are the two most important stocks, because they're going to tell us how the economy is actually doing. If iPhone's not quite selling the way it is, and there are other products as well, it definitely shows you that there's some real weakness in the overall economy out there. And it should give some cause for concern. And obviously, Apple's pretty much the best net income company in the world. So if their net income's hurt, it hurts the entire S&P 500 earnings, right? Amazon, another super important company to pay attention to. They have two extremely vital businesses for the United States of America, right? Two of the most vital businesses. One is Amazon, their e-commerce platform. That's going to tell us how goods sector is doing. Goods got hit heavily in 2022. Does it continue to in 2023? That would be recessionary, right? The other component is Amazon Web Services. Most of the internet is run on Amazon Web Services nowadays. And so if you're talking about companies, apps, websites, everything that is basically run on Amazon Web Services, where's that whole show at? Are companies pulling back, right? Or as many companies even using Amazon Web Services? Or is there going to be any sort of competitive pricing battle there? That would definitely be another sign of recessionary if companies are that tight on budget that they're really considering, do I really want to sign up with AWS or go with another platform, right? Because in the past, a lot of times it was just like AWS, I don't care, like we're just going with AWS. So those are important companies to pay attention to. Those will let us know if everything's okay, and they'll read us a bedtime story and tell us it's fine. And then we can go continue on this bull trend. But if those babies got some negative stuff to say, we'll tank this market back down. And that Dow will go negative for the year. And the NASDAQ will come back more into more realistic ranges. And I think that's just something important. We're not out of the woods in regards to the earnings situation. Inflation's coming down, that's great. The Fed seems to be starting to chill back, cool. But the bottom line is these babies will dictate where this market's really going. And all these companies are reporting over the next 2 weeks, all of them. And that's what's going to be actually what drives this market. And then we'll know. Then we'll get the reality of, is this really believable or is it not, right? Because right now, bulls are in denial and bears are in denial of what's going on. And they say, this can't be. This can't be, okay? Hope you guys enjoyed today's video. As always, if you're looking to take investing much more serious over this next year, consider applying for the Private Stock Group and Private Wealth Group. Also, check out the Patreon that will be linked in the description area. Much love and have a great day.